So you tried to pull a sneaky on me, did you? Listen, man, Mr. Project Finance, Chris, I believe. Um, if you can, I'd actually like to have a discussion about your MicroStrategy position and just Bitcoin in general and how it relates to option pricing and kind of what I've noticed that option pricing is implying about MicroStrategy, and I'm actually really interested to see your thoughts. But I'm gonna react to this video that you deleted, which had a typo, compounding. Just giving you shit. Literally, compounding. But I'm gonna react to this real quick because I didn't like it, man. I didn't like it. Um,
Has
yeah.
fallen from a high of 69,000 in November of 2021 to around $30,000 in May of 2022, a loss of over 50% in half a year. With such a volatile price and a price that has declined so much in recent months, is it still a good idea to invest in Bitcoin? And if so, what is the best investment strategy to follow going forward? In this video, I'm going to share my two-pronged Bitcoin investment approach, as well as how I'd invest in Bitcoin going forward if I had some cash to allocate to Bitcoin right now, but have not.
So he kind of just goes on to talk about dollar cost average, and then he shills this platform that obviously paid him to talk about it called Swan, and their whole thing is if you buy little bits at a time, there's not a bunch of transaction costs. So he shows that for a minute, and then I don't know what that was about. And then he kind of goes into his price assumptions, and he said like, I'm not gonna find it, but he's like, I don't think it's gonna go to zero, and I see it substantially increasing in the future. So here's one thing that I've noticed. Here's a constructive criticism about this community is that actual investors, not alpha status stocks or fucking meet Kevin or something, actual investors will say investing is acquiring future cash flows at some discount. And the discrepancy between those future cash flows and the price that you buy it at is your return. Or if that's flipped, that's your like negative return, right? And as investors, we seek to find discrepancies between these two numbers, and hopefully that gap will close and we will make some sort of return. All I hear about with people who buy Bitcoin is that well, more people are going to buy into it, and that's just going to increase the price. When it comes to actual companies, the justification is this company will create a thing or a product that people use, and it will create cash, and it becomes to a point where you'd be silly not to own it because it just pays you back so much, and it's going to generate so much more money in the future. Crypto does not do that. And as we saw recently, anything that provides a yield is essentially a Ponzi scheme. So,
Deal with the volatility is knowing that I'm in it for the long.
or not necessarily a Ponzi scheme, but yield farming. Typically, if it's like proof of stake, I believe I might be butchering the terms here. Is essentially a short. You're short a put option. So you're loaning out to someone who's using crypto as collateral. So if that crypto collapsed, they're not going to be able to pay you back. So it's essentially being you're just betting that the market's not going to drop substantially, which is just like a short lending is kind of like just a short put option on the crypto market.
When I buy Bitcoin, I do so comfortably and without caring about time in the market because I know that I am investing in Bitcoin.
So he says this, but he has some pretty weird, wacky calls on MicroStrategy. That's yeah.
For the long term, and I don't plan on selling anytime soon. Bitcoin is down about 16% over the past 12 months as I record this, but it's
I don't think that's accurate.
helpful to zoom out to see the bigger picture. Over the past 2 years, Bitcoin has compounded
Compounding.
75% annually from 10,000 to 30,000. Over the past 5 years, Bitcoin has compounded
All right. you're just like, oh, it just goes down sometimes, but just buy it, easy. And he makes this goofy a comparison that's just tainted with survivorship bias. And he's like, well, Apple and Amazon both fell a lot. Okay, what about the other 100 companies that fell a lot? What about Intel? Okay, Intel or Cisco, right? They fell a lot in 2000. Fell 80%. Uh, what's your return now if you bought sometime in 2000? Oh, you're down 30% still after 20 years. So this is a such a cherry-picked thing here, and I feel like not to give you shit, Chris, but 400K subs, and it feels like you just threw this video together to throw in this sponsor. Um,
In
but
2020, Amazon lost 95% of its value from 1999 to 2001. But over the long term, Apple and Amazon, as we all know, have been life changing investments for those who could stomach those huge drawdowns and focus on the long term vision of these two.
yeah, the thing is, I'm not entirely sure of your whole position, but this this gets into what I preach a lot, which is if you're bullish on Bitcoin, a buying call options way out of the money on a leveraged Bitcoin proxy company, th- that doesn't make any sense. If you can forecast its return and its volatility, you could figure out a correct sizing for the position in your portfolio. But just randomly buying calls on MicroStrategy,
Companies. Bitcoin is no
come on, man.
different, and for that reason, I expect to continue seeing huge swings in Bitcoin's price. And my investment strategy going forward is to continue with these daily purchases to accumulate more and more of Bitcoin over the future, and also buy large.
I feel kind of bad for these people because they got completely stuck in this grift, right? Why? What's keeping Bitcoin from being the next Intel? I mean, if you look at articles for Intel in the 2000s, is like this is the greatest thing ever. It's the fucking future. It's internet. It's technology. What about Cisco? That was another one, right? Jeez, like 85% down, and you're still not back there. That is insane. This was so actually did some math here. This was a bigger bubble than this was like a bigger run up than Tesla. And we're like we thought that was crazy. But this was a bigger run up by percentage wise, like Cisco and Intel. I think specifically Cisco though. Yeah, man. This Bitcoin position like doesn't make any sense. And this is what I specifically want to talk to you about is this specific put option right here. It's a January 19th, 2024 $10 put. You can sell it for a 265 credit and with a max loss of 735 if the company goes to zero. Okay? I know you know about options. What does this imply? Okay? This is implying a pretty hefty chance that this company goes completely out of business in less than 2 years. Why would the market be pricing this? Seems a little suspicious. Seems a little weird.
Larger chunks of
It's
Bitcoin
because it's not sized. It's because it's not sized correctly. The position.
whenever I have cash available to invest. It's pretty remarkable that in 2022, Bitcoin is crashing towards $30,000 when just 2 years ago, Bitcoin was crashing towards.
The problem with highly volatile assets is when they crash fast. I mean, they crash really fast. I think this wasn't too fast, but there are some days where this thing just, I mean, I've seen it drop like I think 20% in a day. So think about if it drops 20% from here, Maybe it has like a 5% down there and it drops 20%. This company is getting margin called MicroStrategy. Um, Wanted to make sure I was still recording. Um, yeah.
$4,000. So if you're interested in buying Bitcoin as an investment, buckle up for the long term. If you're investing money into Bitcoin that you need in 3 to 6 months, then respectfully, you're doing it wrong because in some
And then if you ask people why is Bitcoin such a good investment, they're just like, oh, just watch this Michael Saylor interview. It's gonna solve world hunger. Like so stupid.
such a short amount of time,
It's goofy.
anything can happen in Bitcoin's price. Investing in high volatility assets means seeing big drawdowns and unrealized high volatility assets because the higher your leverage is, the less the asset can draw down before you get liquidated.
Okay, I actually didn't see this portion of the video. Hold on.
Important to avoid leverage, or at least a lot.
Okay, so he says it's important to avoid leverage. Brother, you have out of the money call options on a leveraged proxy company. Leveraged Bitcoin proxy company. What?
A
What do
lot
you
of
mean
leverage.
avoid leverage? Leverage is going to destroy that company.
Investing in high volatility assets because the higher your leverage is, the less the asset can draw.
So, all right, Chris, we need to talk. This is not correct. This this assumes that you're not going to rebalance. And if you don't rebalance when you're using leverage, you're not mathematically optimal. I've explained this before, but basically you use formula, the Kelly criterion, and this is incorrect. Well, this your little picture here is correct, assuming you don't rebalance. But if you don't rebalance, you're ignoring basic math.
Down before you get liquidated and have to sell when the price is declining, which, as we're talking about in this video, is when you want to be buying more units of that asset. I know it's hard to see your portfolios
So again, not really practicing what you preach there
falling in value right
with
now,
that
but
MicroStrategy
if you're
position, which
investing
I don't know if you still have on, but
in a high volatility asset, and it doesn't even have to be Bitcoin. And if you're focused on the long term vision, a good investment strategy to follow is dollar cost averaging into that asset by purchasing more units of that asset in regular intervals. Be prepared.
no. So people get this fucking confused. The studies on dollar cost averaging have to do with index funds, actual companies with earnings and profits. The dollar cost averaging does not apply to individual assets, individual stocks. You, there's no studies on that. The studies that people refer to when they're talking about are the ones on index funds, not on
Prepared to see
individual
big
stocks
swings in the
or
value of that
assets or
position over
Bitcoin.
time and avoid leverage at all costs. While Bitcoin's
Again, avoid leverage at all costs. We're not
price
doing
is
that.
down over the past few months, the network itself continues to produce block after block, and the network is working seamlessly as it should. So the only thing that's changed recently is its price, but the network fundamentals are still intact. So if you're investing
Oh yeah, if it drops down to $1, the only thing that changes is its price, and it's a great buy.
in Bitcoin and you're
All right, that's all I have. That's all I have for that one. I know I'm kind of hammering you, dude, but we should we should chat. I think we got some good back and forth going on. Peace.